What if I told you that one of the most powerful financial decisions I ever made cost me less than $10? Not $1,000, not 100, $10. Now I know what you're thinking. Warren, you're worth over $100 billion. What does $10 have to do with any of that? And I'd say everything, absolutely everything, because the $10 rule isn't about the money itself. It's about the habit, the discipline, the way of thinking that $10 can teach you. And once you understand it, once it really sinks in, you'll never look at money or time the same way again. Stick with me here because what I'm about to share with you isn't just about investing. It's about the way your mind works with money. And the real lesson, as you'll see, isn't what most people expect. My name is Warren Buffett. I grew up in Omaha, Nebraska, and I've spent the better part of 90 years thinking about money. Not spending it, not hoarding it, but understanding it. Understanding what it really is, what it can do, and more importantly, what it says about the person who handles it. People ask me all the time, Warren, what's the secret? What's the one thing that made you different? And they expect some complicated answer about financial models or market timing or secret stock picks. But the truth is simpler, and simpler is almost always better in investing and in life. Let me tell you something I've learned over decades of watching people succeed and fail with money. It is never about the amount you start with. It is always about the habits you build from the very beginning. And those habits, they start with small decisions. They start with $10. When I was 11 years old, I bought my first stock. 3 shares of City Service preferred at $38 a share. I had saved and scraped together every cent of that money. I mowed lawns, I delivered newspapers, I sold chewing gum door to door. Now, did that investment make me rich? No. In fact, it dropped to $27 and I panicked a little, I'll admit it. But then it bounced back to $40 and I sold. I made a small profit and felt pretty pleased with myself. Then I watched it climb to $200. That was my first real lesson. And here's what I learned. Every dollar you have is not just money, it is a tiny seed. And seeds, if you plant them correctly and leave them alone long enough, grow into trees. But if you keep digging them up every time you get nervous or spend them the moment you have them, you'll never see the tree. The $10 rule begins there. It begins with asking yourself every time you consider spending money, is this a seed I'm planting or a seed I'm eating? Because you can eat a seed. It'll fill you up for a moment. But a planted seed, given time, can feed you for a lifetime. Think about that $10 in your wallet right now. That isn't $10. That is potentially $20 or $50 or $100 10 years from now if you treat it with respect, if you give it time. Most people spend it on something they've forgotten about by Tuesday. Successful investors think differently. They ask, what is this seed worth if I plant it today? Albert Einstein, whether he actually said this or not, I've always liked the quote, reportedly called compound interest the eighth wonder of the world. He said, he who understands it earns it. He who doesn't pays it. Now, I want you to really sit with that for a moment because most people intellectually understand compounding, but they don't feel it in their bones. They don't live their financial lives as if compounding is real. And that gap between knowing something and truly believing it, that gap costs people millions of dollars over a lifetime. Here's the simplest way I can put it. If you take $10 today and you invest it in something that grows at 10% per year, which is roughly the long-term average return of the American stock market, in 7 years you'll have $20. In 14 years, $40. In 30 years, almost $200 from $10 without touching it, without doing anything clever or complicated, just patience. Now imagine not $10 but 10,000 or 100,000. The math is the same. The principle is identical. And here's what breaks my heart when I talk to young people. They have the most precious asset of all, and they don't even know it. They have time. A 25-year-old has 40 years of compounding ahead of them. 40 years. That is an almost unfair advantage over someone who starts at 45. But most 25-year-olds aren't thinking about 40 years from now. They're thinking about next weekend. One mistake many investors make is believing they need to time the market or find the next hot stock or take big risks to get big rewards. They're trying to get rich quickly because they don't believe compounding will get them there fast enough. But that impatience is the enemy. That impatience is the single biggest destroyer of wealth I have ever witnessed. So what exactly is the $10 rule? It sounds almost insultingly simple. Are you ready? Spend $10 less than you earn every single day, every single week, every single month. That's it. That's the whole rule. Now, before you click away and say, Warren, that's obvious, let me stop you, because I want you to think about how many people actually do this. Not people who intend to, not people who say they will, people who actually consistently, reliably spend less than they earn and invest the difference. If you look around at the people you know, how many of them genuinely live by this rule? I'd guess it's a small number, a very small number. I grew up during the Great Depression. My father, Howard Buffett, was a stockbroker in Omaha. I watched families lose everything, not because the economy collapsed, though it did, but because they had built their lives on spending every dollar they made and sometimes more. When the income stopped, there was nothing left. No buffer, no seeds in the ground, just debt and fear. My friend Charlie Munger, and he'll forgive me for saying this, used to say that the secret to getting wealthy is to be reliably not stupid rather than occasionally brilliant. The $10 rule is that. It's not brilliant. It's just not stupid. But practiced consistently over a lifetime, it generates results that look brilliant from the outside. Spend $10 less every time, not sometimes, not when the markets are up, not when you feel financially confident, every time. Because discipline practiced in the easy moments is just habit. Discipline practiced in the hard moments. When you're tempted, when your friends are spending freely, when there's something shiny calling your name, that is the difference between ordinary and extraordinary financial outcomes. If there's one lesson history keeps teaching us, it's that human nature doesn't change. The markets change, the technologies change, the companies change, but fear and greed, they are as old as money itself, and they destroy wealth as reliably today as they did in 1929, in 2000, in 2008. Let me take you back to the year 2000. The dot-com bubble. The internet was new and exciting, and everyone was certain they were going to get rich. Companies with no revenue, no profits, sometimes no real product, were valued at billions of dollars. People were quitting their jobs to day trade stocks. Taxi drivers were giving stock tips. And whenever taxi drivers start giving stock tips, that's the moment I get nervous. I remember being criticized heavily during that period. People said Buffett had lost his touch. He doesn't understand the new economy. He's out of touch with technology. And you know what? Maybe I didn't fully understand every internet company. But I understood valuations. I understood that you cannot pay $10,000 for something worth $10 and expect it to work out long term. You can hope, you can speculate, but you cannot invest that way. When the bubble burst, trillions of dollars in value evaporated. People who had ignored the $10 rule, who had spent more than they earned to invest in speculative assets, who had borrowed money to buy stocks they didn't understand, who had confused excitement with analysis, those people were devastated, not just financially, emotionally, years of savings gone. And then it happened again in 2008, the housing crisis. I won't go into every detail, but the core of it was the same ancient story. People believed that prices would always go up. That risk had been eliminated, that this time was different. It was never different. It is never different. The tree of financial recklessness always bears the same fruit. But here's what I also remember about 2008. While many people were panicking, selling everything at the bottom, I was buying because I had followed the $10 rule my whole life. I had capital, I had patience, I had what Charlie used to call a prepared mind. When everyone else was running out of the burning theater, I was able to walk in carefully and pick up assets at extraordinary prices. Fear in others creates opportunity for those who are prepared. Now, let me shift for a moment and talk about what I actually do with the money I save, because saving is only half the equation. The other half is putting that money to work intelligently. I buy businesses, not stocks, businesses. There's a psychological difference in those two framings that matters enormously. When you buy a stock, it's easy to feel like you're buying a lottery ticket, a number that goes up and down on a screen. But when you buy a business, even a small piece of a business, you're buying something real. You're buying earnings, customers, competitive advantages, capable management, a future. I look for what I call a moat, like the moat around a medieval castle. I want a business that has something protecting it from competition. Maybe it's a powerful brand like Coca-Cola. People all over the world will pay a premium for that red can. Why? Not because the liquid inside is dramatically different from other colas, because of what it means to them. Decades of advertising, of association, of trust. That's a moat. I also look for businesses I understand. This sounds simple, but it's where a lot of people go wrong. They invest in companies because they're exciting, because their friends recommended them, because the stock is going up, but they couldn't explain in plain English what the company does and how it makes money. If you can't explain the business to a 12-year-old, you probably shouldn't be betting your savings on it. And I look for management I trust. Business is ultimately done by people. Great businesses can be ruined by bad management. Good management can turn a struggling business around. When I invest in a company, I'm trusting the people running it to be honest, capable, and focused on the long term. I've made mistakes here, paid too much attention to the business and not enough to the people. You learn. But here's the thing. None of these principles are exotic. None of them require a finance degree or a Bloomberg terminal. They are common sense applied with discipline. The problem isn't that people don't know these things. The problem is that common sense is uncommon in practice, especially when markets are moving fast and emotions are running high. Calculate when they're chasing fast returns. I want to say something now that goes beyond investing because I think it's the most important thing. Money is a mirror, not of your intelligence, not of your luck, but of your character. The way you handled $10 tells me an enormous amount about the person you are and the person you're becoming. Are you someone who thinks about the future? Are you someone who can delay gratification? Are you someone who makes decisions based on principles rather than impulses? When I was a teenager, I read a book that changed my life, The Intelligent Investor by Benjamin Graham. It was not an easy read, but in it, Graham described something he called Mr. Market. Mr. Market, he said, is your business partner, and every day he shows up at your door with an offer to buy your shares or sell you his. And Mr. Market is a deeply emotional fellow. Some days he's euphoric, convinced everything is wonderful, and he offers you absurdly high prices. Other days he's terrified, convinced the world is ending, and he'll sell his shares to you for almost nothing. The key insight is this: you are never obligated to do business with Mr. Market. You can simply ignore him on the days when he's irrational, which frankly is most days. You only have to act when he's offering you something genuinely advantageous. This is an extraordinary freedom that most investors never use because they let Mr. Market's moods infect their own thinking. Young investors, I want to speak directly to you for a moment. You have something I no longer have, and it is more valuable than any stock tip I could give you. You have time, 40, 50, maybe 60 years of investing ahead of you. In that time, you will see markets rise and fall. You will see crashes that feel like the end of the world and bubbles that feel like they'll never pop. Every single time, the people who stayed calm, stayed invested, and kept planting seeds, they came out ahead. Do not try to get rich quickly. I have never met a single get-rich-quick scheme that, followed to its conclusion, made the average person wealthy. I have met hundreds of people who tried and lost years of savings, but I have met thousands of people who quietly, patiently followed the simple principles: spend less than you earn, invest the difference in things you understand, leave it alone and let it compound. And they built remarkable financial security. It's quiet work. It doesn't make exciting cocktail party conversation, but it works. And here is something nobody tells you. Getting rich slowly is actually more enjoyable than getting rich quickly, because it's built on a foundation you understand. You know why you have what you have. You are never depending on luck. You are never lying awake at night terrified that the next market move is going to wipe you out. That peace of mind is worth more than most people. So let me bring it back to where we started. The $10 rule. $10 less than you earn. Every time. Invested with patience in things you understand, left alone to compound across years and decades. It won't feel dramatic. It won't feel exciting. On any given day, you will not be able to measure the difference it's making. That's the nature of compounding. It's invisible in the short term and astonishing in the long term, like a great oak tree. You don't watch it grow, but one day you look up and it's enormous, and it's been there long enough that you almost forget you planted it. I have lived by this rule since I was a child. I still live by it today. I don't spend money on things I don't need to impress people I don't particularly like. I don't chase investment fads. I don't panic when the market drops. I don't get euphoric when it soars. I just keep planting seeds. I just keep following the rule. The best investment you can ever make is in yourself. Read, learn, think. Develop the habit of thoughtful financial decision-making before you have a lot of money to manage, because the habit you build with $10 is the same habit you'll use with 10 million. Character and discipline aren't things you summon when the stakes get high. They are practiced daily in the small moments, in the quiet decisions, in the $10 that nobody's watching. Wealth is not built in the extraordinary moments. It is built in the ordinary ones, repeated consistently over time. And when you get that, when you really get it, $10 becomes the most powerful amount of money in the world. Before you go, I want to leave you with one challenge, just one. This week, find $10 you would have spent on something forgettable, coffee, a quick lunch, an impulse purchase, and instead put it somewhere that will grow. A savings account, an index fund, a small investment in a business you believe in. It doesn't matter what, as long as you're planting it instead of eating it. Then do it next week and the week after. Not because $10 will change your life overnight, but because the habit will, the discipline will, the way of thinking about money that $10 teaches you, that will change everything. Think long term, not next quarter, not next year. Think about the person you want to be in 30 years and ask yourself, is what I'm doing today planting seeds for that person, or am I eating every seed I have? The best time to start was 20 years ago. The second best time is right now. Don't wait for the right moment. Don't wait until you have more money. Start with $10. Start today.